public wakes up and shifts just a few tenths of 1% of their allocation that was going into bonds, into precious metals, or into equities that were going into precious metals, it will, I think, you create a massive breakout in the price of gold in terms of its investment demand. When you realize this transformation of, I think, of attitude and of reality, where gold is holding its own, but I think it's actually catching the attention of a lot of nations around the world who are shedding U.S. Treasuries and in favor of gold, as crazy as that sounds. But what did the BIS call it? Oh, yeah, the only other tier one asset in the world alongside U.S. dollars and U.S. Treasuries.
China and Japan, historically major holders of U.S. Treasuries, have witnessed a significant decline in their holdings, marking record lows. According to data from the U.S. Department of the Treasury, the value of Chinese holdings of Treasuries experienced the most substantial drop in a year in September. In addition, Saudi Arabia's stockpile of U.S. Treasuries has plummeted to its lowest level in over 6 years. The kingdom has been directing more of its oil wealth towards riskier assets. In June, Saudi Arabia sold over $3 billion in U.S. government debt, continuing a 3-month streak of selling and bringing its holdings down to $108.1 billion. Likewise, the United Arab Emirates sold nearly $4 billion in U.S. Treasuries during the same period. Countries such as China, Japan, Saudi Arabia, and Russia have steadily decreased their investments in U.S. Treasuries while significantly increasing their allocation towards gold. After the Ukraine conflict, central banks ramped up gold purchases for hedging, or reducing reliance on the dollar. Russia and China notably increased their gold reserves during this period. Central banks saw a 100% spike in gold accumulation from 2022 to 2023, acquiring over 1,100 tons in 2022 compared to 450 tons in 2021. Due to its stability and performance, Andy Schectman speculates that nations might be eyeing gold as an alternative to bonds. He emphasizes the absence of counterparty risks associated with gold and the ability to hold gold reserves independently. This shift in perspective is capturing the attention of various nations seeking diversification away from the Western-dominated financial system. Even the Bank for International Settlements, BIS, has recognized gold as the only other Tier 1 asset alongside US dollars and US Treasuries. Andy notes a decline in the dominance of the US dollar in global transactions, citing instances where more than 20% of oil sales used other currencies in 2023. This trend and pricing of goods in different currencies may significantly affect the dollar's global settlement and reserve status. We will present clips from Andy Schectman's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
China and Japan and Saudi Arabia and Russia and all of these countries shed U.S. Treasuries. What are they doing with their excess reserves? They're buying gold. And that's why you see over the last 2 years, the central bank's buying more gold than at any time in human history. And if we look at the performance over the last 2 years, what did I say it was? It was 1801 average price in 2022, 1943 in 2023. You go back over the beginning of the century, a 7.8% annual return not only beats the S&P, but destroys the bond market. Maybe we just load up on gold because that pretty well acts just like a bond. In fact, it's outperformed it. It has greater or lesser volatility right now, and we don't have to rely upon the honesty and the transparency of the West. In fact, there's no counterparty risk. We can hold it ourselves. And so when you realize this transformation of, I think, of attitude and of reality, where gold is holding its own, but I think it's actually catching the attention of a lot of nations around the world who are shedding U.S. Treasuries and in favor of gold, as crazy as that sounds. But what did the BIS call it? Oh, yeah, the only other tier one asset in the world alongside U.S. dollars and U.S. Treasuries. So if you want to break reliance on the Western system and on the Western hegemony, well, certainly pricing goods in other currencies for settlement chips away at the settlement of the U.S. dollar. And what did we see last year? 2023, over 20% of all oil sales in other currencies, right? They're chipping away. All of these deals we see settling in other currencies. chipping away. And how about the reserve status? Well, you keep beating up and chipping away at the settlement status, it's going to have effect on the reserve status. But I do honestly believe that a lot of these governments view gold, by looking at its performance over the last 20 plus years, maybe even a better alternative to treasuries. Now, the one thing they don't have would be that immediate liquidity, but they do. I mean, you have to move it from storage. And that's always why these countries have kept gold at the Bank of England and the New York Fed, because they're the trading humps where they can just move it from one vault or one pile to another and then get paid. But I do think that there is a shift, a gradual shift that most of the dollar bulls don't notice yet. I think the dollar milkshake theory has been spot on. I think he's a smart dude, Brent Johnson. I think he's been right. But I think little by little by little by little, logarithmic decay, again, that's my favorite term in so many things I look at around the world, is chipping away not only at the settlement status, but this move to gold, which has held its own against the S&P and bettered supposedly the most liquid, stable market in the world that now has actually less volatility than the 10-year Treasury, I think is beginning to take on a different view or a different image with the rest of the world. And if you look at the numbers, they really don't lie that gold could indeed represent that hole that would be in place if they shift away from taking the reserves or the excess. That was part of the petro deal. Will you value oil in dollars and take the excess and put it in treasuries? Well, if you remove the treasury aspect and put it into the other tier one asset, gold, with no counterparty liability and breaking free from the Western hegemony as they all want to do, to me, I think that's on the table. That's a playbook that I think you'll see more and more of here in 2024.
The US corporate bond market is gearing up for a slower pace next week compared to the frenetic activity seen at the beginning of the year. This slowdown comes after some mixed economic signals on Friday, adjusted expectations about a potential interest rate cut in March. Top-rated companies capitalized on lower borrowing costs due to tightened credit spreads and decreased Treasury yields from the end of 2023. Andy's insights into the bond market highlight significant volatility and subdued demand observed during auctions of various Treasury bonds, including the 2-year, 10-year and 30-year options. While there is continued demand attributed to the higher rates being offered, he suggests that there might be a threshold where demand begins to wane. The overarching influence of the market over the Federal Reserve suggests that market dynamics could potentially outweigh the Fed's control, especially if interest rates fail to address concerns related to inflation and default risks adequately. This implies that the market's response might eventually dictate the economy's direction, potentially challenging the Fed's ability to steer it solely through monetary policy adjustments. Let's get back to the interview.
There is a good portion of the world that would say, you know what, I don't care. I'm going to look at gold as our treasuries, and we're going to put our excess into gold, which I believe will be part of the new system. I mean, look at Saudi Arabia. Saudi Arabia has over $1 trillion. I think the number is 1.3 trillion in it's a new fund. I don't know how to call it properly, but it's a new, if it's a fund or a sovereign wealth fund or whatever it is, it's a Saudi government program to invest globally in mining. They're going around the world and buying up all they can or investing all they can alongside of China in mining precious metals. And I think there's a lot to be said for precious metals and industrial metals. This is what Zoltan Pozsar said. We are moving into a period of time of transparency in commodities. And so, the Ibbotson study basically said, look, and the Ibbotson study was done more so during a period of time of interest rate suppression. But if we're going back in that direction again, where we're going to lower interest rates and think that the market is not as powerful as the Fed, I think that will be something the Fed will ultimately learn, that the market is more powerful than they are, when ultimately the world says, look, Dunnigan, I can't understand why anyone would be foolish enough to lend the U.S. government money with any length of duration. I understand why people would buy 6-month treasuries or less, paying 5%, certainly better than being in a bank account, certainly better than having any exposure to the bank if you go to treasurydirect.gov, because if the U.S. government defaults on its loans, we have bigger problems. You'll see banks, cascading. But when you talk about lending money to the government in a 10-year or a 30-year, I think you're out of your mind. Who the hell would do that? And I think that's kind of why we're beginning to see alternatives, perhaps, or the way that the world looks at gold differently and why you're seeing them accumulated. And when Ibbotson wrote that report, we had interest rates that were, at or near zero or really, really low. Their comment was that it is the only inversely correlated asset to the U.S. stock market. And in many respects, it still is. It's the inversely correlated asset to the Western system. So I think that it will become more and more and more important to view it that way. The big money is always front running. And when you see the most well-informed traders in the world, not only the wealthiest, but the most informed, for 2 years running buy more gold than at any time in central bank history, if you're not catching this, you're missing something. At the same time, we see great volatility and long tails in the bond market auctions where there is not enough demand for the 2 and the 10 and the 30-year treasuries that they're selling unless they continue to jack up the rates. So there will be demand for these treasuries until there isn't, but at some level. Question is, what level will that be? And so this is what I mean about the market being more powerful than the Fed. And, if not, if there is no demand because the rates are not high enough to compensate not only for inflation, not only for default risk, but also for the outright risk of higher rates.
As global growth slows and inflation eases, central banks are anticipated to take a more dovish stance. The prolonged tightening of monetary policy signals a gradual global growth slowdown. The shift toward purchasing gold over bonds and treasuries by multiple countries strongly suggests gold is increasingly considered a safe future hedge. What do you think about gold being seen as a secure asset and its price movements? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.